Many of you asked me about my opinion on HSY, which is a Hershey company. A lot of you love the product. Maybe you love the chocolate. Here in the United States, it was sitting at $280. Now it's sitting at $187. The stock keeps going down every single day, like there's no end in sight. And a lot of you are just curious, and I've seen a lot of people on Twitter buy the dip, and I personally have a different opinion on Hershey. I'm a little bit bearish on the company. I'm going to tell you why. I'm going to analyze why the stock is even going down and just give my overall opinion on the stock. Now, to get started with Hershey's, the valuation is getting a little bit better. I did share this post on Twitter. Now the PE ratio is sitting at 19 times. Well below the 24 time of the mean. And if you look at the COVID low, Hershey bottomed around 18 times and now is sitting around 19 times. So there's a lot of, pretty much bad news, a lot of bad sentiment around the stock. And this is normally what you want to have whenever you want to buy something that most people don't want to buy. But one of the things that a lot of people believe is causing the sell-off, and I had said before that it's an absolute joke, and it's mainly the whole Ozempic stuff, the Ozempic weight loss pill that people take the Ozempic and then they're not going to eat chocolates, they're not going to drink Pepsi or Coke, they're not going to eat, chips and all that kind of stuff. And this has been proven wrong. If you look at the Pepsi's quarter, it was pretty good. The volume did decline, but it has been declining for a while. But it was much better than expected. And it showed everyone that this whole Ozempic stuff is just, fake news. It's just something just overhyped. Yes, maybe it causes people to pull back on chocolate and other things, or maybe just a healthy diet. People don't want to eat chocolate. Maybe they want to eat dark chocolate, which Hershey actually has, but it's not as overblown. It's not as important as people believe, in my opinion. The second one that people believe it might be causing Hershey to go down is the competition from a lot of different companies. Even Mr. Beast, he launched some, £2 or $2 or €2 chocolate, pretty much all around the world, and it has been selling out pretty much everywhere. And a lot of people believe that's just causing problems on Hershey. This is possible. There's a lot of competition in the industry. So this could be a possibility. But if you look at Hershey's portfolio, it's not just the Hershey bars that It's, the York stuff, the Reese's, Kit Kat, Kisses, and a lot of the pretzels and the skinny popcorn and many other brands. So it's not just the chocolate. The chocolate is the most, well-known brands they have. They have the Ice Cube, gums and a lot of other things. So it's a pretty interesting company. If you look at the United States, they have over a 33.5% market share in terms of chocolate as of 2021. 26.1% is Mars. And then you have other companies. Nestle is around 3.7%. Private label is something like 1.9%. But Hershey's is the dominant company in the United States with over a 33.5% market share. Pretty good. If you look at their margins, they also have one of the highest margins in the industry in terms of their U.S. operations. You could look at the gross margins, 44%, much higher than Mondelez at 37%. Same thing with operating margin, 23%, much higher than Mondelez and Kellogg and others at 16% and 12%. So it has much higher margin. It's way ahead of the competition. They have a lot of price flexibility if they want to decrease prices or increase prices and many other things. The guidance, it was not bad at all. It was pretty much the same thing. They did increase adjusted EPS growth a little bit from 11 to 12%, but they did decrease the reported EPS, which is actual GAAP numbers, from 15% to 13 to 15%. It wasn't a big deal in my opinion. Earnings were good in general. But one concerning thing with Hershey's, and it's not just with Hershey's, with most companies, even Coca-Cola is suffering from this and many others, is the volume. You can see the volume is declining. There's no organic growth, pretty much. Look at the volume, it's down 3.6% in North America, and the salty snacks is also down a little bit. International, the volume increased, pretty interesting, to 2.8%. So in total, the organic volume declined 2.7%, but they were able to hike prices 7.7%, which gave them a 5% growth. So they were able to offset it with price hikes. But if you have other competitors, like maybe Mr. Beast's company or other people, maybe they're not going to be able to keep hiking prices forever, especially if the consumer taste changes. This is the biggest risk with Hershey, is that they are very dependent on, on price increases. And you have a lot of the new generation people, they maybe want to try something new. Maybe they just don't want to eat Hershey's. Maybe they want to eat something else. Or, it's just maybe they don't want to drink Coke. They want to drink something else. I mean, it's just the way it is. It's not easy to be in this business. It's a lot of competition. And this is one of the reasons why Hershey's is going down. But if you look at Hershey's revenue growth in general, this was one of the COVID beneficiaries, if you want to call it. It used to grow like 1 to 2%. Then in 2021, it grew 10%. 2022, it grew 16.4%. In 2023, now they're going to grow around 8%. And in the future, they're expected to grow much higher than pre-COVID, around 3 to 4%. So the revenue growth has decreased, and this is one of the reasons why, Hershey has been declining. I think it's, pretty common sense, and I think it's justified. You look at the PE ratio, we talked about this, around 19 times earnings. On the COVID lows, the stock bottomed around something like 18 times earnings, so it's getting pretty close to its COVID low. But all that kind of stuff is not enough for me to come up with a conclusion on Hershey. I have to look at my valuation model. And in my valuation model, I put in 4% revenue growth from 2023 to 2027, which I believe is fair and is in line with the analysts, between 3 to 4%, much higher than the pre-COVID of 1 to 2%. So this is a bit of a gamble here on increasing prices a little bit higher. But I think 4% is fair. Net income margin has been 17%. I kept it at 17%. PE ratio, I put in at 22 times earnings. This is because the mean is around 22 times earnings. Now it's sitting around 19 times. I'm betting on Hershey is getting back to a mean multiple of 22 times, which I believe is fair. In total, with their 3.1% dividend, which is 2.1% and 1% buybacks, 3.1% shareholders yield, I'm only getting 35% on the upside, or 6.2% CAGR, which is extremely low. Very, very low. And if I want to buy Hershey's and get a double on my money, I would have to buy it at $131 per share. I know it sounds very low, it sounds ridiculous, but I'm just not seeing the appeal in buying Hershey at this price. I'm just not seeing it at all. And declining volume, mostly, hiking prices, which is not bad at all. But everything is pretty much declining. The stock is still extremely overvalued, in my opinion. I'm pretty bearish on the company. I personally believe there's better opportunities elsewhere. Why would I buy Hershey while you have a lot of other good consumer staple companies that are coming down with much better valuation, a much wider moat, and much better growth in general, much higher margins also. So for me personally, I would not touch Hershey's pretty much above something like 135 or 140. I'm not sure if it's getting close to 131. But this is my pretty fair valuation model. I think most of you guys can agree with me on this. That I'm not saying how I could be wrong. Unless they grow revenues 8% for the next 4 to 5 years, I think this is extremely unlikely. Just being honest, unless the PE ratio goes to 30, I'm not seeing how this is going to happen. I think these are fair estimates. And I'm only seeing $131. So I know maybe I upset some of you in the video, but this was just my honest opinion on Hershey's. I hope you enjoyed it. It was not financial advice. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.